Hello everyone, welcome back to another video. Today we will discuss about a very important topic which is being neglected by many traders or investors, which is very popular for someone who is selling a strategy. The topic we are discussing today is backtesting. So why I am opening the notepad and drawing pad, because I don't have much good editing skills. I'm poor and lazy at editing, but that's all right. What our motto will be to explain you the topic, right? So we will stick to the topic. I will improve my editing, but I was thinking to show you some live backtest data and from different website, but we are not going to do that. That will be like defaming any website, because website may or may not be wrong, and there are lots of things. So we will first do it here, then I will suggest you how you can check your backtests are reliable or not and what it is. So at this stage I hope you all are aware about what the backtesting is. The backtesting means checking your data or your strategy performance in last 1 to 5 years or whatever time period. A past performance without trading in real life is called backtesting in layman's terms. You can do backtesting on chart, which is much reliable, but today we will discuss about backtesting on terms of data. Like you are putting in any application or any website that 920 settle, 25% stop loss, X trading stop loss, Y exit criteria, then RSI, this, that, whatever you are putting in a software, then that website or particular software will give you the data, that max profit, about max loss, max drawdown to recovery ratio, daily profit, average profit, percentage, curve, everything, right? So how true is that? Or many time you all have experienced that what we are checking in backtest is different from what happens in the live market. So today I will teach you that how you can check that. Please be till the end of the video and focus on my words, not on the screen as well. So let's start. So first we will discuss about what is small factor that can affect backtesting. First factor can be curve fitting. What the curve fitting means? It means that strategy worked well, and let's assume backtest is also well, okay, work well in 2018, 19, 20, and let's say 21 as well. And then you saw the data of backtesting that, oh my god, 4 years profitable, it means a lot. Then you started in 2022 and it went worst, right? Why? It is not the strategy's fault. It may come back in 2022, 23, or it may not. Or it may come back in 2024 as well, or it may not as well, right? So nobody's fault is this. Market change the dynamics, market change the behavior of itself, so everything changes. So you cannot rely that the strategy worked in past will work in future. So that's the first drawback of backtesting. Backtesting in terms of data, not in terms of chart. I have opened the chart for you, not in terms of chart like breakdown, breakout, no, the data term, right? So what then? What again? What next? So next can be error in calculation of indicators. So I will give you an example. Let's assume about example about super trend. Super trend, do you know super trend can be calculated in two ways, from ATR or from EMA, or that too from sometimes from DMA as well, daily moving average, sometimes from normal moving average as well. Super trend can be calculated in various method. So many times I have seen trader on chart, they are using super trend which is calculated on basis of EMA, and then their backtesting software is using the super trend which was calculated on ATR. The settings are correct, but the calculation on which super trend relies differs. So backtest will be differ. So there will be error in calculation. This is not error in calculation. This is error. This is not even an error. We can say this is a different way of super trend calculation. So you need to check. So what is error? Error can be in RSI, MACD, Ichimoku, Kimo Cloud. I'm using short form. So let's say that if you are checking HDFC Bank on today's 3 minutes chart or 5 minutes chart, let us assume 5 minutes chart. On 9:45, the RSI was on 42.4, and on another app it will be different. On another app it will be little bit different on some apps. So if let's say X broker, Y broker, and Z broker chart differs from TradingView or tradinginvesting.com, then it can differ from your backtesting apps. There are lots of applications and website in Indian market who provides you paid or free backtest. So you have to check that how their calculation. Now, I don't know, you can check or you cannot check. So there can be error in calculation of indicators, which can result into very different data when you are going at the end of backtesting. Third point is look ahead bias. So I have took this point from somewhere else, but meanings are my own. What does it mean? Right? So let's say you are trading on Nifty. Okay. So you are looking at the chart of future. Or let's say you are okay, let's say you are looking at chart of Nifty future. What if backtesting is using Nifty spot chart or vice versa? Or let's say you are using Nifty futures, Nifty cash chart, Nifty spot chart. This is Nifty 50 index. This is Nifty spot. This is Nifty future, right? So you can see Nifty future, Nifty spot. Little bit difference in, okay, that is different. Little bit difference here. Price is also different. See, so this can happen. This is a very small error. Very small error. But many times some traders forget that to change the setting. I have seen traders who are doing this simple stupid mistake on look ahead basis. They are looking at Nifty futures chart, but their backtesting website was using Nifty spot chart, and they saw a massive profit, and then they started real trading, and then they lost the money. But still backtesting was showing that it was profit, and the guy said no, I have lost it. Then after solving the confusion, he realized that he was using uh, in backtesting software, he was using the spot chart, but actually he needed to use the future chart. So this can be error. This can be in as well in stock futures as well, right? So another thing is ignoring slippage, and let's take another point another time. Ignoring slippage. So how backtest work? See, every backtest, every backtest has 1 minute closing data. Nobody had a second data. 1 minute closing data. Please mark on this word. So what is that? So let's see 1 minute candle. So this is 1 minute candle. So if you have put that your entry will come at 3 p.m. It's near, so I'm taking 3 p.m. So it will take open. What is open price at 3 p.m.? So open price of 3 p.m. is, you can see here, it is written, it will come here. Okay, focus. Open price is 24,758. So that price is on, okay, let's see. The open price is, let's assume anything. Okay, it was this as well on 3 p.m. So this is 3 p.m. Okay, and your order may execute on real time at this time, 3 p.m. and 18 seconds. So price may, though, see, in 1 second Nifty can move anywhere. So in 18 second it can move. So it may move at 768. So here in 18 second it can easily move for 10 rupees. So this is a slippage. See, backtest will always be on 1 minute chart, but it will always be on open price. They calculate open. If you are saying that my order should be placed on sharp 3 p.m. in backtesting, it will check 3 p.m. open price. This is 3 p.m.'s open price. But what? See, this is 3 p.m.'s open price. Then at 3:01, the price will be different. Let's say 24,769, right? So between this 1 minute, there are 60 seconds, and anything can happen in 60 seconds in market. You all know better than me. So you cannot ignore this thing. This is like ignoring slippages, right? This is not slippage. This can be slippage. So I hope you got my point. What I'm trying to convey here, that in between anything can happen in between. So they are calculating this open price, then they are calculating this open price. But what about in between? Your order will fall in between itself. Our APIs are good, but still sometimes it takes 5, 10, 15, 20, 30 seconds as well to place or exit the order. Right? Another one is transaction cost. So there can be brokerage, STT, GST, exchange charges, etc. So there are lots of charges. So let's say you are doing a straddle. So straddle will be one buy, one sell, one cover, and one another cover. So let's say call buy, call sell, put buy, put sell. So there are four orders, and brokerage as per 20 rupees, it will be 80 rupees brokerage plus other charges. Your cost per straddle will be around 90 rupees. I am just assuming. It may vary. 20 rupees is standard discount price. So 90 rupees into, you are trading for 21 days a month. So 91 rupees into 21, 90 rupees into 21. So it comes at 90 into 21, it comes at 1819 yearly, which goes to at 22,680 rupees. So this is your cost per straddle, and the let's go ahead, and the margin required per straddle nowadays is 2.5 lakh. Let's assume it. So for 2.5 lakh, the 25,000 is 22,000 is 9 percentage. So if your backtest suggests 25 percentage profit per year, please deduct standard brokerage. Here it is 9 percentage. So real profit is not 25 percentage, is it 16 percentage? I hope you got my point. Yes, this is per lot brokerage. If you multiply the lot, charges reduces. Charges vary from broker to broker. Less charges for higher quantity, and charges differ from broker to broker. I will suggest here, do your own brokerage calculation before starting any strategy. Sometimes what happen, your strategy is given 12%, 15%, 20% per annum, but you have paid 10% charges, and then you are left with 8%, 10%, which is what a mutual fund return, which you have earned in whole year by scratching your head, and your head went gray. Right? I hope you got the point of calculating your brokerage before starting anything. Right? So I hope you got this. And another point is the quality, data quality issue. Yes, that is a very major point. Data quality issue. Let's do it capital. Data quality issue. Can we bold this? We cannot. Okay. First data quality example is this. This is not data quality example. This is something that you are not aware. Let's say you are checking this data, but your order is being placed on this data, right? It may vary 5 second, 10 second, and in 2 second market can turn around. You all know this better than me. I don't have to explain it again and again to you people. But let's say data quality issue. First is 1 minute data which you are not aware. It is not a quality issue, but still same time frame, still different result. This is where I was going to show you backtest sheets in different platforms. See, let's see. Let's you can do your expect. You can do this experiment by your own. What you have to do is just take any four backtesting website. India have I think 9 to 10 backtesting NSA website. I know there can be more. You can take, let's say, three websites. You search NSC Nifty strategy backtest. You will get tens of links. So go to that link. Pick a simple strategy. Let's say 920 straddle. Backtest in all three websites. The result in all three websites will be different, and there can be minor different. There can be some major different as well, right? So, so that is what I was trying to cover. That was my main issue. That was the main point of making this video is, if you are checking in a X website and I am checking in a Y website, our both data may differ, not every time. It may differ, and we can never decide that which one is correct, which one is correct. Maybe both of them are wrong. Both of them cannot be correct, but maybe both of them can be wrong, right? So what you can do, you can always front test. I will tell you to always front test your strategy. How you can front test? You will say front test is time wasting, but yeah, it is better than back testing. Okay, so I will make another video on how to front test, right? How to, if you cannot do 5 years of front testing, then when you will start trading, right? So we will make another video how to front test and how to decide you have to go with the strategy or not, right? Once again, I am not SEBI registered. This is just for education purpose. These above points you please go through once again. And I have seen my lots of friends who are who have started trading from the backtesting, and then they fell like anything. They just got high expectation that C strategy is giving 3% a month. We have enough capital, 3% a month will be this amount. Wow. And then the phase started and they never recovered. Backtesting is not bad. I am not downgrading anything, but you have to see all this issue. You have to see that this is something you cannot see, but this is something you can check. This is something you should check. This is stupidity if you're not checking. This is something you should always check. Snippet. This is a brokerage cost which, see, backtesting data will never include brokerage cost because it varies from your quantity, your broker, your time period. STT was different in 2019. STT is different now, right? The lot size was different. Before Nifty was at 25 lot, now it is at 75 lot. Before I am going to do three different lots, it is 60 rupees. Now it is 20 rupees because the lot is combined to one. It's not 75. It's 75 quantity per lot, not 25 per lot. And this as well. I will tell you a classic example. Now let's come to the example of one of my friend. See, these are my friend only. It's not like that I have made a mistake and I'm covering with another someone else's name. So these are my friends. So what he did a backtesting in a backtesting. Let's it is this. No, let's keep it for your reference. Let's go down. So what he have does did he did backtesting in XYZ platform of a option selling strategy, right? What happened is when he backtested the option selling strategy, he got great result. Then he used for 1 month. Result was not loss, but it was average result. Let's say he did backtesting of 2018 to December 2024. In January 2025, he did live, right? So in Feb 2025, he compared his live data versus Jan 2025 backtest. When he was in February, he did January 2025 backtesting. He compared his data without brokerage. Yes, obviously without brokerage. He compared. There was big difference. There were days when he was in minus 7,500 and strategy was in plus 8,000. So this is difference of 15,500. So this is something stupidity, right? So this was not his mistake, this was backtest company's mistake, but company clarified that we have 1 minute data. I will show you what happens. I'm assuming what happens, but I know what happens, but I will tell you with an example. Let's say we have 60 seconds before another closing comes. Let's say the data of this 10 minute and data of, so what happened in backtest? In backtest, at this price, he got entered at 50 rupees, and at 11:45 he got exit in profit. It was option selling, so he got exit at 12 rupees. Let's say 38 rupees profit, right? But in live, he entered in 10 a.m. and some 46 seconds, if I remember, and he entered at price of 56 rupees. 6 rupees option can change, option can change 50 rupees in a second. This was 45 second, it changed 6 rupees. So here stop loss triggered, and here, because it was taken as 50 rupees in calculation, it was not triggered. So here he was not in loss, he exited in profit, and it was his profit multiplied by whatever lots he have taken, and here it was his loss. I hope you understand from this point. Please go through this. Please be aware before backtesting. Backtesting is not wrong, the way we do is wrong. I hope I have told you some very good insights. Thank you.